Well, hello there, folks. It's always a beautiful day when we have an Investopedia Advisor webinar series. I'm Caleb Silver. That's you too. And that's Bob Oros, the CEO of Hightower. Delighted to have everybody back for our Investopedia Advisor webinar series. Delighted to have you here, Bob. It's been a while. I've been wanting to have you on this for quite a while. Congratulations on reaching $100 billion plus now in assets under management. And thanks so much for joining our webinar series.
Well, thanks, Caleb. Good to see you again, and great to be here.
Well, last time I spoke with you in person, this was a couple of years ago. You had just taken over recently as CEO of Hightower. You had the PE backing. You'd really sort of just put everything in gear to set up for this big build that's been going on now for the last couple of years. But when you look across the industry, it's kind of happening across the entire wealth management industry. You just seem to have been very successful at it. So we're going to share some slides. We're going to get into a little bit more. And folks who are on the webinar, put your questions in the Q&A. We'll get to as many as we can in the course of the conversation. If we don't get to them, you can email them to us and we will have Bob or myself answer those for you. So again, delighted to have you here. I'm going to see if I can share a screen here and we'll get after it and hopefully not break anything here. We looking full screen here, Bob?
We are.
Good deal. All right, that was the hardest thing. Again, I'm Caleb Silver, the editor-in-chief of Investopedia. Folks who have been along for the ride on these webinar series know these well, and we always try to help bring education and advice and industry knowledge to financial advisors, but also individual investors that follow the industry. So happy to be your host, and Bob Oros, the chairman and CEO of Hightower. You joined in 2019, as we were just talking about. Give us some early learnings. It's been a fast ride just in those last couple of years, and then you had the pandemic in the middle of it. Bob, give us some of your observations sitting atop this massive RIA now.
Well, I mean, first of all, it feels like dog years for me when you say it's only been since 2019. I feel like I've been doing this and have been here a lot longer. But my first observation is what a great time to be in this industry where we get to give advice to people to help make their lives better, to help them retire sooner, to help them put kids through school. And I think it's just great to see the industry thrive. As you mentioned, there are a lot of firms doing really well. And I think that's really a statement about advice, the need for great advice, and the role that RIAs play in that.
Yeah. If we've ever needed advice, financial advice or the benefit of financial advisors is really been in the last couple of years. Please continue.
Yeah, and with all this growth, I mean, it's just fundamentally changing our industry. When I first started working with RIAs 20 years ago, I don't think we could have ever imagined $100 billion RIA. And now there are a few of them, and there will be many more who will eclipse that number. So, with that growth, it also changes a lot about how you have to think about running your business.
Yeah, I totally want to get into that. And you're right, there are some big ones out there, and you are among the biggest, but we've seen this industry grow and continue to grow. And we also see the backing of private equity and venture capital, because there is a belief that this is only going to get bigger. Give us a sense, why is bigger better in your industry? Obviously, there are benefits of scale, but now that you sit atop one of these, why is bigger better?
Well, I mean, I think you have to be careful not just to focus on being bigger, because being bigger isn't always better. It's what you do with it that matters. So from our standpoint, and I can only speak for Hightower, we want to turn our scale into a number of positive things for our advisors and their clients. So yes, when you get real scale, it helps you run your business more efficiently, more cost effectively, which allows us to reinvest in the business. So I think first and foremost, being big gives you the ability to do things that when you're smaller, you just can't do. And I'll give you one real example at Hightower. We've spent the last year and a half working with the OCC to charter a national trust company. I mean, most RIAs would never do that. One, it's a tremendous amount of work. Two, it takes significant capital. Three, it takes a heck of a lot of talent and commitment to do it. But at our size, we can actually credibly do something like that. And so, it's how do you translate that bigness into goodness that I think is really what matters here.
Yeah, great point. So bigger isn't always better, but it's better if you can do it right, right? And then the economies of scale really, really make a lot of sense. What are the challenges of scale?
Yeah, and thank you for asking that, because I think it gets really easy to think being big, being scalable is glamorous. It's a heck of a lot of work, and it's not just scale, it's also the pace at which you're getting there that's equally, if not more important, because you can get to scale over time and sort of incrementally grow into it. But when you're growing, like a lot of the firms you showed earlier, and like Hightower, that's exponential growth. I mean, we are doubling the size of the firm every 2 to 3 years. And it forces you into a different model for how you run the business. We have to constantly challenge everything we do and how we do it, because processes and policies that work when you're smaller, all of a sudden you find when you double, wow, that doesn't work so well anymore. You've got to deploy technology in really, really smart ways. I'll give you one example. Every RIA listening, does something called billing. Billing is really important. It's what makes these businesses go. When you're billing on 300 households, you could do that off a spreadsheet. When you're billing on 30 or 40,000 households, no spreadsheet's going to handle that. And so, 2 years ago, we made a decision to bring in an enterprise ERP system, multi-million-dollar investment, because we needed to have, big time scale in the area of financial reporting and billing. And so it's just another example where if you don't pay attention to those things, if you're not paying attention to what might break next, your scale can also come back to bite you.
And to wit, advisors, and you and I know a lot of them, you know a lot more than I do, but they have the dual challenge of servicing their clients, attracting new clients, and then running the back office, the small business of being an RIA. And that is not trivial. They could spend half their time doing that when they really should be spending most of their time, right? Servicing their clients, marketing for new clients, developing new offerings to offer their existing clients. So the back office part of it, billing is just one of them, but there's probably a laundry list of about 50 things that they have to do just on the daily and the weekly to keep the wheels moving, right?
Well, great point. And, I always start with, what's your passion? If you're running an advisory firm, what is your passion? If it's serving clients, and I'm not going to say it's this black and white, but if you're serving clients, your passion probably isn't running the business and worrying about those things you just mentioned. But running the business is a full-time job. And the bigger your business gets, the more it needs that dedicated attention. So I think it starts with, what do you really enjoy doing? And once you're clear on that yourself as a business owner, you got to have the courage to then, move yourself maybe out of a role or two and focus where your highest and best use is. And you just said something else really important around developing more capabilities. And, I think in our industry, we hear still a lot of chatter about price pressure. We look at that data. We look at it very deeply. We look at it regularly, and we don't see it. So we're not buyers of price pressure here, but I am a buyer of fee for value and having to continue to expand how you add value to your client relationships. And so you've got to be prepared. This is a business that's changing rapidly. And if you're running, a small to mid-size RIA, how are you going to stay relevant? How are you going to stay relevant a year from now, 3 years, 5 years from now? And so it just puts a lot of demands on you as a business owner.
Right. Well, we've seen a lot of mergers and acquisitions in this industry, 110 billion or so of assets under management right now. Most of that is you acquiring some firms, people bringing their firms in to the Hightower fold. We've got a ton of M&A deals, and the size of some of these deals is really big, $2 billion, right? That's double from 2017. We're probably going to see more deals down the road here. When do you think we're going to see peak M&A for the RIA industry, in your opinion?
Yeah, I think we're still quite a ways from seeing the peak of this. Remember, this was an industry that was very much a cottage industry until the last 5 to 7 years. As it matured, capital that came to the industry, sort of forced some of that maturity. but it's still highly fragmented. We still have more net new RIAs being created every year. So even though there may be record levels of transactions, we still have a ways to go before we see peak. It's incredibly active right now. And I attribute that to, I think, two dynamics outside of just normal pace. One is pent up demand from last year. I can tell you as a firm that's got a core competency at doing this, we did not focus on knocking on doors and having acquisition conversations last March, April, May into June. Like, to do so, I think would have been tone deaf. We were focused on safety and security, stability, a lot of other things, but talking to a principal owner of an RIA about selling was not good timing. So that sort of, came back online late Q3 into Q4, which has created, this little bit of a bubble that we're seeing with a lot of deals. I opened, some of the trade publications today, and I think there were 4 or 5 deals announced just today. And that probably continues because in combination, there's a sense of urgency around getting deals closed this year for people who are worried about future tax policy. And so we're also, so we're seeing those two things, I think, in the short run, create a burst of energy. But I think this paces and runs for years to come.
Very interesting. Now, you mentioned this was a cottage industry, 7, 8 years ago, but then it suddenly took off. What do you attribute that to? Is that technology? Was that the fact that there were more people who were invested, who needed that kind of a help? What do you think really lit the fire under this bonfire, so to speak?
Yeah, so I think it's a combination of things. So first, the model. The RIA model stands for always putting the client's interest first, being a fiduciary. And it's just hard to argue with a business that is focused on the client and only their interest and eliminating as many conflicts of interest. And if you have one, you're disclosing it and it's clear. So I think the model has been winning for years. And if you look at the data, it proves it out. RIA industry has been picking up market share consistently over the last 10 years. And then in combination with professional capital coming in, because if we look back over the last 20 years, we just didn't see a lot of deals and certainly not a lot of deals of size getting done. And when you would occasionally see one, it was really sort of a big event, unlike now. And I think, all those folks you had up on the screen, I couldn't swear it right now, but most of them have some degree of private capital, private equity sitting behind them. And I, for one, don't think that's a bad thing. I think it's forced the industry to run these businesses in a much more disciplined way, but again, still on the behalf of the client, which is so key. So I think that continues as more and more clients, they want an advice solution that they know is in their best interest in all cases.
Right. There's also the aspect of holistic financial planning. It's not just that they want someone to run their portfolio or they want someone to help them beat the benchmark. I'm a client of an RIA. We need full service, right? I got kids going to college. I got older parents may need some healthcare. I got my own healthcare issues to deal with, private investments, public investments, my career, my savings. So financial planning, and I know you've seen this, right from the box seats, is more holistic than ever, which is why people need it more because our lives have become seemingly more complicated.
Well, think about it. If we're going into a meeting and the most interesting thing we're talking about is, did we beat a benchmark? You're setting yourself up for failure because you may beat it some quarters, you're not going to beat it other quarters. And frankly, that's not where value is created. It's all those other things. And it was one of the reasons when I joined the firm, we took a step back and wanted to reimagine who we were, how we branded ourselves, how we articulated that brand. And we use a tagline of wealth, WELL-TH, rebalanced. Because wealth, when you ask people what it means to them, rarely is it the value of their portfolio. It's almost always things that have an emotional connection. And so you're absolutely right. The needs of clients are growing. And I think it's really interesting to watch advisory firms, continue to expand in ways that might not be obvious. Like, I'll give you one example. Life and transition services. Like, what's that got to do with managing money? You can argue nothing, or you can argue, well,
Everything.
That's a big part of what people with money go through. Like, when you get to retirement, what's next? And I think advisors are increasingly getting really good at finding areas to add value that, are a little bit out of the norm. And it creates a little bit of differentiation as well.
Sure. Let's go back to what you were mentioning about private capital and private equity's interest in this area. I think we spoke about this a couple of years ago. What is it you think that attracts private equity to this industry? Is it the recurring cash flows? Is it the fact that it keeps growing and the assets under management under all of these firms continues to grow and we're going to have wealth transfer? What are the 2 or 3 things you can pinpoint as to why PE is so interested in this sector?
Well, I think anytime they can find an industry with, you just said it, high recurring revenue, high client retention. I mean, most good advisory firms probably have 98% or higher retention. And you have a high degree of fragmentation here. So it's like other industries they've seen before. When you can put that combination together, it's an area that they have a ton of attraction to. And as I said, I think it's been good for the industry. It's forced the industry to act with a lot more discipline. And at the end of the day, to have firms that are sustainable and that will be around, like all the names on this screen, I would expect they're going to continue to thrive 5, 10, 20 years from now. And that's good for clients because you want that continuity. So I think it's that combination of, a lot of things they like, which makes it predictable. And on top of it, it's pretty capital light. It's not like we're going out buying big pieces of machinery. So I think it's just an area it's a natural for private equity.
Right. Let's talk about how you work with RIAs and the type of RIAs you're looking for. What are you looking for in terms of size, in terms of type? Is it regionally specific? When you go out there and you're sort of scouring the landscape for potential firms to partner with and bring into the Hightower umbrella, what is it that you're specifically, or what's on your checklist?
Yeah, let me start with what it's not. We don't look at size as a key determinant, and we don't look at geography. I learned long ago, there's money everywhere. And it may not be obvious, but when you look there, most places have money because they've got things that are unique to that geography. So we don't pay attention to those things so much. What we're looking for first and foremost, high quality leadership teams. I mean, it's going to sound very cliche, but in our model, we aren't operators. We want to continue to fuel a great leadership team that's excited about their business, that still wants to continue to work in it. So that's like the first thing we look for. And if we find a high quality team, regardless if they manage 200 million or 2 billion, we'll be attracted to it. Secondly, we look for talent. So have they sort of assembled the right talent there? Have they identified the next generation of leadership? Because again, we want these businesses to run into perpetuity. And then the third thing from our standpoint, which I will say is more scarce if you really look at it, and that's growth. So we want folks who have a growth mindset and who have a proven ability to grow. This is an industry that averages 4.5% organic growth. And let's be really clear on how we think that should be measured, because folks tend to give you that number in a variety of ways. That is no market, no acquired assets, a real same store sales number. And, a lot of our industry doesn't grow. Their revenues may grow because markets go up. But when you look at the real net new asset growth, a lot of firms don't have it. So, we are not people who think we can take someone who hasn't grown and turn them into growers. We want to take someone growing at 5% and figure out how to make them grow at 10. And in our average has been, this year through mid-year, 8.5% annualized organic growth. And that's while we're still in the midst of a pandemic. So, we think this will be a double-digit organic growth business. We think it's the most important kind of growth. So those are really the things we look for. Size then becomes more of do we merge it into one of our existing businesses, or do we do a deal direct? So that's where size may play a role in our point of view. But we think there are great businesses that may not have a lot of assets yet, but have the potential for it.
I want to take a couple of these questions because there's some smart ones here. Who's been the most significant strategic partner, tech platforms or otherwise, that has helped Hightower achieve this growth that you've had in the last couple of years?
Yeah, it's a good question, and there are a lot of good choices we've made around partners. So first and foremost, we're not believers, even at our size and scale, that we need to build everything. And so we've made some good fundamental decisions that really have paid off. Like everything we have is in the cloud. Never was that more important than in March of 2020 when we had to immediately work in a different construct. We've made a clear commitment to Salesforce as sort of our backbone of our technology stack. So we have a number of key technology partners. And then we also, look for other partners where we don't think building it ourselves adds unique value. So we have a partnership with Biz Equity for providing valuations to private business owners. Why is that important? It's a great value opportunity for our advisors with either the business owner clients they have or a prospective client to go in and help them understand what their business is worth. So we're not believers that you need to do this alone. And it's for us really where we can add unique value, we'll likely build it or buy it. Where we can't, we want to have a great partner that can scale with us.
So you've mentioned that you're not necessarily looking for size and it's not necessarily in any region, but what also makes a firm not a fit? Something that is an immediate no to you, what turns Hightower off from a potential acquisition or just not even thinking about firms in that realm?
Yeah, no, I mean, I think, all of us should be judicious with our time. And especially now, I mean, with the volume of activity and frankly, the run up in valuation, you've got to figure out where you have a good fit and then lean into those. So, I would tell you where we probably will lose interest is if a firm is just not growing and doesn't express a real mindset for doing that. That's probably one we walk away from. If we have a principal owner who wants to walk away very quickly from the business, historically, that's an area that just, isn't a fit for us. We want principals who want to be around, and it doesn't mean they need to be around forever, but who still are excited about the business and want to work in it for a period of time. So it's those types of things. If we saw somebody that was really purely only asset management focused, we would have to question where that fits. We have a growing investment solutions team led by Stephanie Link. So it's possible we might do something there to add to that. But as a standalone, back to your earlier point, we're way more interested in holistic firms, just because we think there's more value creation that can happen there.
P.S. Picking up Stephanie Link was like picking up Kevin Durant for the Brooklyn Nets. I mean, what a sharpshooter! What a tremendous talent. Watch her on CNBC all the time. Yeah. Just great at explaining, what's going on in the markets in ways that really make a lot of sense for regular people like me. So great acquisition or great pickup there to the team.
Yeah, that was a pandemic pickup, Caleb. So Stephanie and I actually didn't have the chance to physically meet until 2 months ago.
What a talent. She's tremendous. Yeah. This is a question that keeps coming up, and that is, if you're a small RIA thinking about selling to Hightower or another one of the bigger firms out there, what do you have to do to sort of get ready to have that conversation or get your business ready to be in a conversation to potentially sell?
Yeah. So first of all, I want to be really clear. I don't think everybody should sell. I don't think everybody should engage in a transaction. I think everybody should be educated, should lift their head, see what's out there and make an informed decision, whether they continue to do it alone or choose to do it through joining someone larger. So I just want to be really clear on that. I don't see this industry down the road being an industry of 10 mega players. I think we're going to continue to see a place for small, really boutique-y RIAs who provide great localized service. But if you are thinking about doing something, number one, it's not a light switch. You can't just wake up and say, oh, now I think I want to do something. Like, you need to give yourself time to be ready. And first and foremost, you got to run it like a business. You can't run it like a practice. You can't run it like a hobby. You got to run it like a business with real tight financials, with a business strategy, with bringing the right talent in. And some of this also speaks to, if you're going to do something, how you can maximize value, because those are the things that those of us buying RIAs are going to look at. So if we have, a business being run as a business with great talent, growing, like, we're going to pay more for that. So I think it's doing things like that that can make you a credible seller and make any of the buyers out there look and find you attractive.
Great points. I'm going to stop the share here, so we'll go back on camera, just you and me here, and everybody else that's joining us. There's a very smart but very personal question that someone is asking here. I'm going to throw it at you, Bob. As you've navigated your time as CEO, especially through COVID, what KPIs are you most proud of driving in terms of what you've been able to drive beyond the assets under management? Because that's the highlight number, that's the big press release. But internally, you're a leader. What are you most proud of?
Honestly, we just did an engagement survey of all of our people, and I'm probably most proud of the progress we've seen there. And it's something we do every year, but to see even during a really tough time, that we're continuing to have a team here that feels connected to something bigger, where they feel like the organization cares about them. And I give a lot of credit to my leadership team, my head of HR, and a bunch of other folks who made it really clear during this last year and a half. Safety and stability was our North Star. We cared about people, and it was genuine, and it's made us a better organization. So as we come back to a new normal, because it won't look the way it did before, it's going to be a new normal that's going to be a hybrid world. I think we come back not just bigger, but stronger. So really proud of how we showed up during a really uncharted time.
Right. It's about the people, right? And caring for the people. And we needed it. People needed care. And just to know that their firm or their parent company was behind them made a big deal on our side. I'm sure it made a big deal on yours. Let's, on the way out here, forecast a little bit into the future. Not looking for hard numbers here, but just dream with me a little bit. 2 years from now, what's Hightower going to be like? Well, how big might it be? What other areas might you encompass? What's your vision? What's your dream?
Yeah, 2 to 3 years, I would say we probably are close to doubling again, because our strategy is evergreen. Drive, leading organic growth with a really credible M&A player here and doing acquisitions. But I think where you're going to see us really start to expand is the service offering. So as the bullseye, we continue to move out in the circles, we're going to bring more and more interesting things to the table for our advisors to deliver to their clients. So stay tuned. We'll be talking about some of those over the course of this year. But we're certainly looking at some pretty creative things that I think will be exciting.
I can't wait. And we're going to have you back when those things start to manifest. But we really enjoyed speaking with you. Congratulations, obviously, on the growth, but more importantly, on keeping that team strong. And it seems like things are in a good place for the industry overall. And we love that, because nobody believes in the value of financial advice more than we do here at Investopedia. I know you share those same feelings. So Bob Oros, Chairman and CEO of Hightower, thanks so much for being a part of our webinar series.
Thanks, Caleb. Great to be here.
We'll let you two take us out today. And thanks to all of you guys for joining us. We'll see you on the next Investopedia Advisor webinar series.